Hey everybody, it's Monday, so of course that means I'm going to be working on the new issue of MMT Trader that will be out later today. If you are not on the distribution list and if you would like to get the issue along with all the back issues, then go to my website pitbulleconomics.com and sign up for a 30-day free trial. Well, there's a lot to talk about. Some of it's actually quite humorous. Over the weekend, I came across an article in none other than the Wall Street Journal with a big headline saying the dollar's weakness is one of the great mysteries of the foreign exchange market. So here was the venerable Wall Street Journal, which I think I stopped reading that about 25 or 30 years ago because it's a pure rag sheet. But anyway, the Wall Street Journal admitting it is completely baffled by the dollar's weakness in the face of 5 rate hikes so far. Now remember, let's go back. Everybody in the whole world thought that it was a lock that the dollar would go up and up and up because the Fed had reversed course on monetary policy back in December of 2015 and started to raise interest rates. I was the only one, and you can go back to that period in time and review my YouTube videos where I said, this is it. This is a change in direction in the dollar's trend. The dollar will be going down. And I have done many videos on this channel explaining the relationship between rate adjustments and exchange rates. And I have explained how higher interest rates, that's functionally, that is price setting higher. Remember, I always have said to you to think about rate adjustments as price adjustments. So price setting higher, that is inflationary, number one. Number two, it is by definition a fiscal expansion. That's literally money printing. We're printing money. They're printing money. They're printing money. They're printing money. They're printing money. That's what all these quacks and all these loonies were screaming about during quantitative easing, which was unprinting money. Rate hikes, that's real money printing. That is inflationary, all else equal, and it is ludicrous, it is ridiculous to believe that when you inflate the currency, that should reflect in a higher exchange rate. But the entire body of mainstream economics, including all of mainstream economic and business journalism, told you that, hey, it's a lock, the dollar was going up. And what happened? It went down. And now here's the Wall Street Journal just like, what happened? What's going on? I mean, it was supposed to go up. Rate hikes make No, rate hikes do not make currency go up. And vice versa, rate cuts make currency stronger because that's the reverse. That is price setting lower. That is deflationary. That is the net removal of income from the economy. All right, all this stuff. That's why during QE, when all these wacko nut jobs were predicting inflation and hyperinflation, not me, the opposite happened. The opposite happened. You had a period of very low inflation, in some cases deflation or disinflation. You had negative year over year in the CPI. So I was the only one who got this right. It is so funny. It is hilarious. It is hysterical and comical to see the Wall Street Journal, that rag sheet, which is what it is, saying, what the heck happened? We had rate hikes and the dollar it's a great mystery. One of the great mysteries of the foreign exchange. It's not a mystery. It's a mystery if you are uneducated. It is a mystery if you do not understand how the monetary system functions, which none of these guys do. Nobody on Wall Street does. Nobody in mainstream economics understands it either. My people, that's why we got it all right. We have been short the dollar the entire time. We have been long inflation sensitive investments the entire time. By the way, on the inflation thing, and that would include commodities and oil, which I started buying, okay, back in 2016 at what, $30 a barrel? Now it's what, 63? And all along, when all the zombies, every single week, when they saw maybe some change in oil inventories, like a build in crude, oh my God, we got to sell, No, I kept saying, look, that report, which I cover in detail every Wednesday, has tons and tons of information in it. You have to be able to synthesize that information. I had my people long oil the entire time. Now, on the subject of commodities and the inflation cycle, none other than Jeffrey Gundlach. He says the best investment right now for him that he sees is commodities. You know, Gundlach, he's sometimes a great contrarian indicator. Or I like to make fun of the guy, but every once in a while, look, he gets it right. And in this particular case, he is getting it right. So let's just spell it out. The decline in the dollar is not over. Maybe you're going to have, we're in a corrective phase now where the dollar's getting a little bit of a bounce, but long term, the dollar is going down. I have explained to you the conditions why that is happening. Okay, it's not just inflation. It's not just fiscal expansion. It is also the trend towards de-dollarization. It is a reaction against United States foreign policy, military policy, you might even want to call it, the ratcheting up and aggressive use of sanctions and attempts to shut entire nations out of the dollar-based global transaction and clearing system. It just, the rest of the world cannot deal with that risk. Okay, that is a liability that is too great, or a potential liability that is too great. Alternatives will be sought. And so you're seeing that manifest right now. But I had to talk to you about this. Wall Street Journal, one of the great mysteries of the foreign exchange market. Why is the dollar not going up? It's supposed to go up. They raised interest rates. Everybody knows that it causes the currency to go up. No. Fools think that way. People who are in the know, who are knowledgeable, and that's us, basically. Those are my people. We understand. That's why we've been short the whole entire time. All right, everybody, I got to get back to work. Again, go to my website, pitbulleconomics.com, and sign up for a 30-day free trial of MMT Trader. Get on the right side of these macro trends. Don't read the Wall Street Journal. If you read the Wall Street Journal, you know what you're doing? You're literally handing your money to us, my people. So if you want, you could still do that, or you could become one of the smart ones and come over to MMT Trader. See everybody later. Maybe. Bye-bye.